In today's interest rate markets, let's take a look at the 10-year note futures today as they're coming under some selling pressure. After reaching a 4.5-month high yesterday, we are seeing them backing off today. Currently 133.13 on the futures market, and I think when you look at some of the factors contributing to the selling pressure today, number one, I think some of the concerns that the market was contending with earlier in the week are slowly coming out of the market here today. And what I mean by that is some of the volatility the market had to deal with and some of the other asset classes earlier in the week. And then the message that came out from the ECB yesterday basically indicating they're going to shift the way they evaluate inflation moving forward. I think that caught the market a little off guard and it caused some destabilization. We did see some selling pressure in the equity markets yesterday, buying pressure in the treasury markets, but now we're seeing some reversal of that today, or some of that coming out of the market, where we're seeing the equity markets up strong today and the treasury markets under a little bit of pressure. Looking at the yields on the 10-year note, 136 basis points currently. Now that's up from 125 yesterday, 125 basis points yesterday. So 11 basis point shift day over day, and back into, again, that 136 level today. And looking at the yield curve, it is interesting that we're seeing really the middle of the curve selling off a little bit more than the back end of the curve, at least here midday, as you're seeing the 7s and the 10s really down more from a percentage standpoint than the 20s and the 30s from a selling standpoint, and therefore we're seeing those yields kicking up a little bit more so today than the back end of the curve.